It's now time to get the latest update on where the analysts are telling where we should be investing. The man who reads these market tea leaves is the country's most prolific tea drinker, Professor Bewley of Woodhall Investment Research. I nearly wrote teetotaler, but we'd both be lying, wouldn't we?
No need to lie.
But Ron, I should explain. Some people don't understand where you get your information from. It is actually you are analysing the analysts, aren't you?
Yes.
Yeah, okay. So,
but it isn't just presenting the numbers, it's what I do with them.
Of course. It's the special econometric massaging that is quite unique to Bewley. All right, mate, so let's go to the first chart. But as well as going up, what's the starting point of this conversation tonight?
It's the best I've felt about the market in a long time.
Yeah.
Because you know what, I'm sometimes not that optimistic.
Yeah.
I'm going to blow you away with a couple of slides, I think.
No, the crowd out there will love you saying it, Ron.
The slides are on my website, woodhall.com.au,
yep.
And they may be a little bit hard to read in places because greens and blues look the same sometimes.
Yeah, okay.
But let's go to the first slide.
Yeah, ASX 200 forecast.
And what you see there, hopefully, for the first time.
The yellow lines look good to me, but...
Yeah, 6,500 is at last on my chart. It's never been on my chart
By
before.
When? Sometime this year or next year?
That's my preview forecast for FY16, so that's June 30.
Saying from June 30 this
13
year.
months away.
So over the next financial year, the Joe Hockey budget year, you're thinking 6,500 is a chance.
6.4, yeah. 6.5 it could be temporarily.
Okay, right.
But what you can see is that my whole track record, if indeed you can unscramble them. They're a little bit hard to see, but I'm talking about.
So
they don't look too bad.
You said your track record. How can we tell your track record from that?
Well, see, each coloured line represents a year or a financial year, depending whether it's solid or dotted.
Yeah.
And the circle at the end is the forecast made 12 months before.
Red ones and the dark coloured ones?
All of them.
Okay.
So
this is what you've been saying on my show for the last 4 or 5 years.
And every 6 months there's another line.
You haven't been an nincompoop. You've been getting it right.
It's been a bit better than, there's somewhere between nincompoop and that, I think.
Yeah. Now, of course, we see that there are points where the market's gone down, but it's the trend line over that period.
So usually within a month before or after, it's spot on. Yeah. And that's good enough for me. You can't do any more than that. Yeah. But the thing I'd like you to recall, because we've talked about this before, and the viewers, if they saw it, is that the black dots are both about 5.9. In other words, predicting from, I think it was September 2013, I said it wasn't going to go anywhere for a while. Yes. And I had good reasons. Yeah.
And you thought 5.9 was going to be a resistance point.
Basically, that's it, in my own way of doing it. Yeah. But now we're ready to leap forth.
Hoo-ha again, I say. All right, let's go to the next chart then.
So now this tells the story, which I think you are also to put to Julia.
Yeah.
Now, this is my exuberance measure.
Okay.
Exuberance is mispricing. Yeah. So if you're 5% exuberance, you're paying 5% more than you should. You're paying 105 rather than 100.
Okay, let's take the financials out of that. Which one is that, Ron?
I can't see without my thing. I don't have the...
Give me that. I've got better eyesight than you.
Yep. So it's in the middle.
Yeah, financials is the second one.
Is the lower one of the three big ones in the middle.
That's right.
So that's about 7 or 8%, and that's in March the 1st.
Okay, so that I would say about 7 or 8%. Yeah. Now, what does that mean, being 2% over the 6% line?
Well, 6% is the magic line, if you remember, and that's where we start talking about corrections or prolonged sideways movements. So when I see 6%, I'm worried. But what everybody can see, hopefully there, without being a statistician, is that there are 5 sectors well above the 6% line, and the others are nowhere near it.
Okay, we're talking health, financials, property, telco and utilities. They're all above the line.
And they are the 4 high-yield sectors plus the defensive one.
Yeah.
So this was the money pouring in to...
There was a game we've been playing for the last 3 years.
But it was dangerous then, I said so. Yeah. But if you held the stock from, say, 6 months before, you don't care, you're still getting the same dividend, but you don't buy there.
That's right. But you bought them when they were below the line anyway, or near the line.
That's what you would have done.
Okay.
But now if we move forward to...
let's go through all the great stocks here. You got materials, you got...
If you go to the red one, though, Peter, that's last night.
Okay.
So now you see everything is cheap. Yeah. Almost.
So looking at the red boxes...
That was last night.
Yeah, the material box is pretty big. The property box is...
No. It's slightly positive there.
Oh, sorry, yeah. So it's industrials. Industrials is the beauty.
No, it's a little bit overpriced, that. But the financials is really cheap. Yeah. Really, really cheap.
Financials are now really cheap, you're saying?
So load up on them. The market's about 3% under.
Yeah.
Telcos are cheap.
All right, now we better explain. Sorry. On one hand, the blue box tells us that financials...
Because that was the 1st of March.
Oh, were overpriced.
Yes, sorry.
And you made the point, and now you're saying they're goodbye.
So that's what's happened.
And I think Julie's going to come on the...
Is sort of on par.
Okay.
Black's a little bit, and you can still buy.
But this is just reconfirming what we've already said. Buy financials.
No, there's a better story, Peter.
There's
a much better story.
Okay, go on.
But you're right.
Yeah.
So if you go from the left to right this financial year, up until you see where it goes from blue to yellow, it's just going sideways, and there were buying opportunities, good buying opportunities. And then it went yellow, but when did it go yellow? Straight after Terry McCrann says rates are going down.
Okay.
So people started to pile in because they wanted more yield.
Yeah.
And then it didn't take long for it to get red. That's a few days. And then it's overpriced. You don't know when it's going to collapse.
We'll call that the McCrann effect.
We could do, or it could even be Terry and Glenn. And then it's red for a while, and then people realise what's going on. They're worried about whether the thing's going to keep happening, and it starts to fall. And it does have to fall because the bubble is bursting. But if you look at the right-hand side...
They've overshot on the downside, you're saying, really, aren't you?
No, we got back to where we started. So on the right-hand side now, you can see a cluster of blue. That's cheap. Which is about the same level we were before the Terry McCrann effect. And that happened straight after that big gap between the green and the blue. Straight after the Reserve Bank said there's no outlook. So people were frightened that they'd missed the play. So I'm saying they're all wrong on that. It was just it was a quick bubble. It went up and down. Well, carry on as you were.
All right, we're running out of time. Let's go to the next chart, because the next chart has some really good stuff. I've already previewed this.
You previewed this one.
Okay.
But that's important to know that things are now all right.
Okay. And to me, what I looked at here, let's go to the very bottom first, ASX 200. You've got a yield of 4.5. This is over the next year, 12 months ahead. 12 months. And 11% gain on the index.
So it's all small.
Okay. But let's go to the top. You've got energy, a yield of 3.4 and a capital gain of 37%.
Yeah, because what happened was, if you go back a while, that forecast was minus 20%. Okay. Because when oil prices...
But to me, that's telling me energy is a buy at this point.
It is, but it's very risky. Yeah, okay. So you don't just go in there whole as nothing else.
Industrials got 3.6 plus 13. Yeah, that's lovely. A 16.6 gain.
There's nothing you wouldn't really want.
Financials 5.4 plus 9.
I mean, you'd want to take a piece.
This is buying territory.
But property's a little bit sus. That's the lowest.
It's done so well for so long, property. You
know, that would be the
even
least
Telco, you got a 12.9%.
So this is the best it's been since I can remember.
Well, Ron, you've never been as exuberant as me, but this is a very exuberant night for you.
I always tell it like my numbers are. And if I'm unhappy, I'm unhappy.
Yeah.
Can't help it.
So I guess it's possible for the next couple of months you could look as though you're wrong, but this is a 12-month forecast.
Yes, and of course it could get cheaper before it gets up there again. Yeah. But you shouldn't be in a rush to get in the market. But we'll be finding a bottom sometime around now. And if you look at the American forecast, because I do the S&P 500 as well, it's bang smack on my forecast for the calendar year and the fiscal year to get to about another 120 points in the rest of...
Well, your econometric colleague Michael Knox wrote a piece not long ago where he said this selling money go away stuff actually doesn't measure up. It's really sometimes sell in April and buy in June. He said historically that's actually had a more reliable historical pattern. But, you know, Ron, this is good news. We are out of time, but you've actually delivered some great stuff. It's on your website.
Yeah, the slides are there.
You're writing this for me as well?
Yeah, no, well, you've got the slides.
All right.
And Penny and the Switzer Super Report got the paper today.
Okay, great.
And also, every week I update these numbers on my website if people want to
Woodhall Research.
Woodhall.com.au.
All right, mate. Thanks for joining
Peter.
us. As always. And I'm sure a lot of my viewers will be very happy that you're saying that, considering the downbeat situation we've been in over the last few months, I guess. So that's Ron Bewley. Coming up, we'll find out if there now is the time to buy banks. Well, Ron says yes. What does Julia Lee say?